good evening guys, it's 9:55 in the UK and we're 5 minutes from the end of the trading day. Just a quick look back at last week's major news. I think the highlight obviously was from the federal fund rate bringing in a 75 basis point rise in the US. We also saw a shock 50 basis point rise from the SMB. And then in the UK with the Bank of England, they all voted for a rate hike, and as forecasted at 1.25, they did increase it by 25 basis points. So we did see that coming out of the UK. Moving on to what we've got coming up this week. Let's just fast forward. Monday, no news. It's been a stagnant day here in the UK. Market's been a little bit boring, no trades to speak of. We do have coming out of Australia at 1 AM the Governor Rupert Lowe speaking, so we could probably see some significant movement around the Australian dollar. And then CPI data coming out of the UK. Can't imagine that's going to show any sort of slacking, so expect to see some more volatility. But later in the day we've got the Fed Chair Powell speaking out of the US. No doubt that will bring some volatility. He's then again speaking on Thursday at 3 PM. And a final day on Friday with RBA Lowe speaking. Now, looking at that, that's not really a significant amount of data really that's been released. So don't expect anything too crazy unless Powell drops some bombs out there in the week. I'm going to start with sterling or cable to look at. And after the FOMC last week, the reason I started with the FOMC data is because one of the major points of information that I look at every weekend is the commitment of traders report. This data is collected on a Tuesday and it's published on a Friday. And this is all the futures markets from reportables, non-reportables, commercials and non-commercials. And I look at this data to see where we could potentially see tops and bottoms in a market, which we just want to see that the commercials are, in this instance, would be looking to buy a lot of British pounds. Why? Because the pound has been sold off heavily. So you want to see the commercials, the industries that use the marketplace to facilitate transactions for business, not for speculation. So what would that mean? Why would they want to buy more? They'd want to buy more pounds because it's cheaper for them to operate their business. So when they've got manufacturing, business, rents, rates, labor costs, you name it, insurances, and they're paying it out of pounds, and yet they've got dollars, euros, you name it, whatever currency of a foreign from a foreign economy, and they can then physically buy pounds at a better value. What they're doing is locking in profits in their business. So they want to buy more of a currency the cheaper it gets. Now, the one downside to FOMC week is when it comes to the reading of the futures contracts, the businesses tend to liquidate their positions. They don't tend to hold, they tend to reduce their exposure to the market. And the reason for that is they don't want to get caught on the wrong side. So we'll probably get a true reading next week. So the data will be collected tomorrow, and then we will see that being published around 9 PM on Friday this coming week. So once that's published, I'll be looking at that data and I'll be looking to see if we've seen some. Basically, I'm looking to see if the commercials have started buying pound aggressively again. Now we've tapped into this major support area. Now, one thing you'll notice is that when price comes down here, you get in some big wicks. You see in the market come down again, it tests, but a wick pops through. Obviously, we've got the pandemic where the market pops right through these areas, and again, you're seeing it test again. But one thing I would like you to look at is before pound actually reverses from these lows or reverses from these highs and again reverses from these lows and reverses from these highs and potentially reverses from these lows. What common trait do you see with this market? Hopefully you can see that it triple bottoms here, double tops here, triple bottoms here, double tops here, and we are forming a double bottom as we speak right now. So if we see commercial buying, this is really going to add to my bias that we're going to see this weekly potentially move. And you can see the weekly range is a good 2,000 pips. That's a lot of profit for potential traders. So what sort of clues would we be looking for down here? Well, first thing I'm going to say is, well, based on this expanding or descending channel we're looking at, one thing you could look for is for price to pop outside of this channel a little bit like this, and then form a higher low somewhere in around the 124s before we could potentially see that next move higher. If you want to be a little bit more aggressive, you're going to have to drop down the time frames, starting to look for a few more clues. Things to potentially look out for, which, to be fair, I'm looking at right now on the 4-hour chart. I think if anything was going to be worth a buy limit or looking for a live trade, would have been somewhere in this area here, and you could put your stops conservatively under here or aggressively slightly under here. And the reason I say that, if we look at this swing low here, again the market created a swing low, swing high, we've come back down, we tested the same price point, created another low, we've broken through, so you've got your inverted head and shoulders, we've come back down to test the neckline. So if price does test this area at some point tomorrow, you could use this as an entry point around 122 and get your stops, give it plenty of space underneath 121. If you wanted to be a little bit more aggressive with the tighter stops, then you're going to have to wait for price to break down, create a new high, and then look for a correction to get long. And then you can use this structure that's just being formed here to place your stops accordingly. So I do like pound for more upside and potentially a good 2,000 point move over the next coming months. If we take a look at the euro, just wait for the market chart to change. Going to go to the daily chart. Something similar sort of pattern formation. We've got a descending channel where the market came in, tested 107.50, and we created a base at 106.40. Now, when the FOMC came out, we obviously had a strong push down into support, and then we reversed off this 104, 103.50 area. So to get long, I would either want to see the market come back down, retest this area here. Alternatively, I'm going to be patient. I'm going to wait for where we've seen the market reject, reject, reject. Here we printed a bearish engulfing candle, which was a clue for us to just sell this straight down into support, and we did show you this, so hopefully some of you traders will have capitalized on that very clear clue there. But what we're going to look for right now is for price to break out of this descending trend line, and potentially it's going to come up into the 107.40 area. When we do that, I'm going to look for price to rotate lower, come back into this area, and that's where I'll look for an early entry. If it doesn't and we get above this 107.40 area, I'm going to use this area to get long. So they're my two options, what I'm looking for. I'm not going to be shorting in this area. If we get below this area, then potential shorts are on the cards. So that's the way I'm going to look at trading the euro dollar. I'm going to move over to a cross pair right now. I'm going to look at Aussie Swiss. So Aussie Swiss, something slightly different, and then I'm going to take a look at a couple of cryptos. So something we've got here, and I think this, obviously it's not being affected by the US dollar in the fact that we're not trading with the US dollar, although it is a triangulation of the US dollar, because Aussie Swiss is, you get your base price from Aussie USD, and you get your quote price from dollar Swiss, and then you're putting those two pairs together effectively to form an Aussie Swiss. So it is a triangulation of the US dollar. Now looking at this market, we can see on the daily chart we've got multiple rejections, 1, 2, 3, 4 clear rejections, and then as support we've got 1, 2, 3, 4, and then we've created and tested a couple of times here. So very simple way of trading this would be using this daily candle here. You can see the new candles just formed. Would be using a buy stop above the high of yesterday's candle, stop loss underneath, and look to basically trade this market up towards the top region of the pattern. You could use this area here as taking your full profits off if you wanted. As you can see, the market accelerated, selling off, came into this area, sold off, and then retested. So that you've got sellers coming in again at this area. So potentially you could see sellers coming again here before we run on up to test the zone again, or it may just continue to move lower. Who knows? So I'd always like to be the first man out with my profit as opposed to being the last man trying to get out. So that's something I would be looking at doing here. So I think it's a real nice trade setup for tonight for those end of day traders that aren't active traders, that just want to sit there, take a position, and basically have a set and forget. So that's what I'm going to look at on the markets tonight. I'm going to go over to a couple of cryptos, and then we're going to call it for Monday night. So, excuse me. Bitcoin, meltdown. This has been fantastic for those that have been shorting, and for those that are holding, probably one of the most painful experiences ever. Now, we did discuss taking this short here where we banked at 25,000, and we did discuss that potentially the market could move down to 20,000, the 2017 highs. Now, obviously I came out at 25, as I discussed in previous webinars, in previous videos, sorry. So as we look at this right now, we can see that the market has come down to test those 2017 highs. We pierced through it, and then we've come back up, and last week's close stayed above those 2017 highs, which in my opinion is a very important move. I think if we would have closed below those highs, then we could have seen a little bit more stress on Bitcoin. Looking at the futures market doesn't paint a pretty picture either. We saw a reduction in long contracts in Bitcoin futures last week by 63%, and we saw an increase in short contracts by 45%. So it's still not looking bullish. If anything, it's looking more bleak, but we'll wait to see what happens on Friday when I look at those futures markets. So what am I going to look for? What clues, what telltale signs can I look for here to be getting long? Well, I'm not going to be buying altcoins just yet because we're not seeing any appetite for buying Bitcoin or Ethereum just yet. So if we drop down to the daily chart, something that we can see is price has created, you can call it twin towers, but basically all it is when you've got two candles that basically have the same body. So you've got a seller candle and a buyer candle, where the open of the seller candle was at the high and the close of the buyer candle was at the high as well. If you combine those two candles, so if I just draw around them and I combine those two daily candles, what you finish up with is this type of candle at support. What is that? Well, it's a hammer. Okay, you can call it a hammer doji, whatever. This is a potential rejection of support. So if that is the case, a break above these highs could potentially see a move higher. And I've just mentioned to you that the futures market didn't seem very positive. That doesn't matter. That doesn't matter. You know, essentially we've gone from 32,000 down to 20,000. So we could see a relief rally before we see another attempt at 20,000. So don't just get caught in thinking, right, the market's such good value now, we need to buy, because what could happen is we could see the market push up. It might just come into this little area here, come back down, test these lows, then we get a change and we double bottom and we go back up. We could see price potentially push back up into this area here around 28,000, then we see it rotate lower and take out these lows, or we could see it reject at 20,000 again. So what I'm saying is there's multiple options in here, but I don't think there's anything of any real clarity just yet. And what we do know is when buyers really do come in for these markets, you will see an acceleration, and I don't think we've seen that yet. So the way that price is moving, it looks more like profit taking to me as opposed to new buyers coming into the marketplace. Areas of interest, just looking at this right now, you've got a short-term trend line that's been broken in this area here. Let me just straighten that up for you. So we've got this little area that's been broken. We've seen the market push higher. potentially pull back down into test those. So I can't see why we wouldn't push higher, maybe 22, 23. But it's not something I want to buy into yet. There's no clues for me to be buying. If we saw a big move up, quite aggressive, and then a pullback, I would probably be more interested in that, because this shows a bit more impulsive moves, some fresh bias, some fresh impetus coming into the market. But right now it just looks more corrective. So I'm not buying into this little correction that we see at the moment. Looking at Ethereum, well, Ethereum got brutalized. I mean, that's before we start talking about other markets. So before the year started out, I was forecasting that Ethereum would potentially come down in towards 17,000, and this is where I wanted to be looking for buying opportunities. Well, it didn't even stop there. I mean, literally obviously we saw, let me just get rid of this right now, and get rid of that. There we go. So we saw Ethereum test 17,000. We got a little move up, then we've come back down, we've tested again, we got a move up, tested it again. Now, one thing that this should be telling you is where this market is giving you that descending trend line, buyers are failing to push higher, and when it's such a key level, this is where you'd expect buyers to really ramp that through there, and the appetite wasn't just there. So price could, from where we sit right now, push back in towards that 1700, and then rotate lower. Now you could say, well, surely if we're sat here now and price went from 1100 up to 1700, you've got a $600 rise, which in theory it's a 50% gain. So if that's a trade that you want to be in, then by all means you go for it. You can look at it, it's 49% rally up into there. I'd be more inclined looking for price to see buyers pull in, see if we can come back down, test this area. If we don't and we get back above 1700, then I'm a buyer at 1700 looking for that next move. When we're down here, I'm not going to be jumping into the market, because we could potentially drop a lot lower, and if we do, then we're going to see the altcoins drop even further. And you know, this is where I'm starting to be interested. I'm watching these markets pretty closely. I'm not jumping into the market. I don't think it's anything that, you know, you should be just jumping into. But if you are interested in the crypto space and you think that this market here is to stay, then there's no harm in dipping your powder, putting a bit of investment into some of these markets right now. Not all of it. Leave your capital on the sidelines, a good chunk, because if it does pop lower, then you can average down, and if it does start to go higher and buyers come back in, then you can buy in with more confidence. Right now this is a bear market. There's no signs of it being anything else, so it's up to you what type of investor, what type of trader you are. If you're an investor, then, you know, by all means, you know, you're probably buying in at a better price than you already have done in the past. So, you know, by all means, you could look to average down, keep some powder on the sidelines, ready for the next potential move, whether that's lower or higher. So that's my market outlook for Monday, the 20th of June. We'll see Nolan looking at some fresh charts for you tomorrow. If you did enjoy the content, please make sure you hit a thumbs up, give us a like, and subscribe, and all those videos will be coming straight to your inbox in the future. Good night, guys. We'll see you tomorrow.